How y'all good people doing? Happy Monday. And man, I can tell you, the weather is starting to change here in Southwest Florida. Woke up this morning, getting ready to go out and get that exercise in. I normally walk about 4 miles every morning. And walked outside and got a little chill. I'm like, what in the world's going on? It's about 65 degrees. So that tells me here in Southwest Florida, where it's pretty much tropical climate 12 months a year, that we're starting to get some cooler weather and humidity is starting to calm down. It's not as hot and muggy anymore. It's October, so we're starting to get some better weather. As you can see, it's a little bit overcast today, but still got that beautiful view. You guys see that view, man. It's still a beautiful, beautiful, beautiful view. But gotta cover a lot of stuff today in the video. We're gonna talk about the Fed and why the Fed could increase rates. We're gonna talk about why they're gonna increase rates or could increase rates. We're also gonna talk about why the stock market fell again. I mean, it's been falling, but we're going to talk about why. And then we're going to end it up with a conversation on the housing market, why it's in trouble. So those are our three topics today, and I hope you guys stick around to hear my thoughts on those three topics and where we stand overall in our economy based on those three topics, right? So that's what we're going to be diving into today. But before we get into those three very important topics, I need you guys to do me a solid. I need you to hit that thumbs up button. Y'all know I always request that you guys do that. It's extremely important you hit the thumbs up button, the like button. As soon as you come into the live, as soon as you come into the video, hit that like button. It's important so that we can get this message spread out to more people and we can touch more people's financial life. We want to get people to financial freedom. The only way we're able to do that is we got to get the YouTube algorithm to spread this video around. And the only way they do that is through the like button. So if you guys can hit that like button for me, I really would appreciate it. We got some people coming in. I appreciate the people that have already hit the like button. I ask the guys and gals who have not hit the like button, please do that favor for me. It helps the channel and it helps me too. Big favor. Hit that like button right away. Also, I want you to consider getting up to 12 free stocks. Weebull is going to give you up to 12 free stocks when you open a new Weebull brokerage account. Put any amount of money in that brokerage account. They're going to give you up to 12 free stocks for just trying out the brokerage app. There's a link down in the description box of this video. Click on that Weebull link. Open up your new Weebull account today. Go get that free stock. Go get that free money. I'm going to also send you a Weebull tutorial video to walk you through how to use the Weebull app to make your first trade. All you got to do is DM me on Instagram at RichardFain28. Let me know you've opened your Weebull account. You funded your Weebull account. And then I'm going to go ahead and send you a Weebull tutorial video to walk you through how to use the app in order to start building wealth immediately. No better time, guys, than right now. No better time than right now to start building wealth. But you can't build wealth unless you have a brokerage app, a brokerage account, in order to buy paper assets. And Weebull offers you a great option. I use Weebull every single day to transact my business and to buy ETFs, individual stocks, and it's been wonderful for the last 2.5 years. So hit that link down below, take yourself off the sideline, put yourself in the game, start building wealth today. Now let's dive into why it's so urgent that I get you guys to pay attention to what we're going to be talking about as it relates to the Federal Reserve, them increasing interest rates. We need to talk about the stock market and why the stock market is continuing to fall. And then we need to end the conversation with the housing market and why it's in trouble. But let's start with the Federal Reserve and interest rates. Now, if you guys are not aware of this, we just had a jobs report that came out last Friday. I want to say that was October 6th. Jobs report came out, tells us how many jobs the economy added in September. Now, most economists had predicted the economy would add around 170,000 new jobs. Those economists were way off the mark, guys. The economy actually added over 336,000 jobs. Why is that important? Well, if you know anything about the Federal Reserve over these last 18 to 20 months, they've been fighting inflation. And they've been fighting inflation by increasing short-term interest rates. Here's the deal, though. In order for inflation to come down, you have to do what with our economy? It has to slow down, right? Spending has to slow down if we want inflation to come down. And one of the ways the Federal Reserve tries to slow down spending is by increasing interest rates. See, when they increase interest rates, they make it harder for people, consumers like you and I, and companies to borrow money cheaply. Typically, when people can borrow money cheaply, companies can borrow money cheaply, they take that cheap money and they spend it. By increasing interest rates, it becomes more expensive to borrow money. So people and companies tend to not borrow. So therefore, what? Spending tends to slow down. But that hasn't really happened 100% like the Fed wanted it to. It has happened some because inflation has come down from 9% to 3.7%, headline inflation. Core inflation is still about 4.3%. So inflation has come down by the Fed increasing short-term interest rates. But you got to understand, the Fed wants inflation at 2%. And that's where we're stuck. Because right now, core inflation is 4.3%. We need it at 2%. And the reason inflation is still stubbornly high is because of the labor market. See, when people have the ability to work, they have ability to get raises, right? Salary raises. When people don't have a fear that, hey, if I do lose this job, I won't be able to find another job, people tend to be more freely with their money. They tend to spend more. And that's what's happening. See, with this labor market adding 336,000 new jobs in the month of September, that is counter to what the Fed is trying to do. Because the Fed knows if the job market or the labor market doesn't slow down and stop adding so many new jobs, then people won't stop spending. See, people are not going to start spending unless they're afraid they're going to lose their job and have no way to take care of themselves. And right now, people ain't afraid of that. And the reason they're not afraid of it is because they have their choice of jobs. When you have 336,000 jobs added to the economy, why would people be afraid to lose a job? They're not. If you look at the month of August, you had 227,000 new jobs added. But 336 in September is the highest amount of jobs being added to our economy since January of this year, guys. A year ago, we were adding over 400,000 jobs per month to the economy. So we have, the Fed has slowed that down some by raising short-term interest rates. But the Fed also understands they will never get inflation to 2% unless the labor market cools off. And right now, we thought it was cooling off because since January of this year, it started coming down. Up until what? This month. Well, actually last month, September. Up until September, it reversed itself and went back up again. So our economy has been really, really resilient. Despite the fact that the Fed is increasing rates to slow down the economy continues to grow. And the economy continues to grow because of the labor market. So how does the Fed fight that? Here's how they fight it. They continue increasing short-term interest rates, which they will do probably in their November 1st meeting. Now, if you remember, last month in their September meeting, they did not increase short-term interest rates. They actually paused. They put a pause on increasing rates last month. Why did they do that? Well, they did it because they wanted to take a wait and see with the economy. They wanted to say, well, okay, let's stop increasing rates and let's see what the economy does. Guess what it did? It added 336,000 new jobs. That's what the economy did. So that tells anybody that's paying attention, it tells us that our economy is still growing. And it's growing at a pretty good pace, which is not good when we're trying to get inflation from 4.3% down to 2%. We're stuck at the 4.3. If we're stuck there for too long, the Fed doesn't believe our economy puts itself in a position for long-term health. And so they're going to continue increasing short-term interest rates. Now, a lot of people believe that, well, let's look at it this way. If we look at the odds from, all these so-called experts out here, economists, financial people, if you talk to them and you ask them, do they believe the Fed is going to increase short-term interest rates in their November meeting, their November 1st meeting, about 40% say yes, but then about 60% say no. Now, these are the experts. When you ask them, do you believe the Fed is going to increase short-term interest rates in November? 60% say no, 40% says yes. Personally, I believe they are going to increase short-term interest rates, and they have to, because we still have a red-hot labor market. The labor market has reversed itself. It's not cooling off as fast as we thought it was. It has reversed itself now and added 336,000 new jobs. Like I said, we haven't seen that type of job activity since January of this year. What the world is going on? Why are jobs continuing to increase? Well, I tell you why. Companies are starting to say to themselves, our economy is pretty resilient. People are still spending. Well, we should go ahead with our plans to expand. We should go ahead with our plans to hire people and get ready for 2024. And so companies are starting to say, well, okay, let's hire again. And a lot of the companies that are doing this, guys, are not your big, gigantic companies. It's really small businesses with 10 employees or less. These people are starting to hire again to try to get themselves in a position to be ready to compete in 2024. So if you look at the jobs report and you're asking yourself, well, what industries had the most jobs added? Well, 90,000 new jobs were added to leisure and hospitality industry. 90,000 new jobs in September 1st. Leisure and hospitality. Now I'm saying to myself, we got inflation at 4.3%. It's been sticky. It won't come down any further than that. The Fed has already told the American people we got to stop spending unnecessarily. But yet and still, leisure and hospitality add 90,000 new jobs in September. What does that tell us? That tells me that people are still having a good time and spending money. Guys, you're talking about leisure and hospitality. That's in most cases, leisure and hospitality does not go with as a need. That's not a need in people's life. Leisure and hospitality. That's not a need. That's traveling. That's hotels. That's restaurants. That's that kind of stuff. And if we're still out here spending unnecessarily on leisure and hospitality, that tells me the American people are not afraid of what the Fed is doing with interest rates. They're not afraid because the labor market is their safety net, right? People don't believe they'll not be able to find a job. See, until you put fear into the pocketbook of the American people, until the Fed can do that, the American people ain't gonna stop spending. They're not. And we're never gonna get inflation under 2% where we want it. Now, the only way the Fed is gonna have to force that to happen is they're gonna have to keep increasing short-term interest rates until the point where potentially could throw us in a recession. That'll wake people up though. That'll wake people up. But right now, leisure and hospitality, 90,000 new jobs. Now, what came behind that? What was second? Government jobs. 70,000, matter of fact, 73,000 new government jobs were added in September. Now, correct me if I'm wrong. Wouldn't we just get ready to shut the country down because we didn't have enough money to run the country until we had an emergency bill just passed by Congress to fund the government for a few more months? But yet it's still, we added 73,000 new government jobs. Guys, what are we doing with our government? Please, somebody help me. Why in the hell are we adding 73,000 new government jobs in September when we were about to shut the whole government down because we didn't have enough money to run it? I mean, I don't get it, man. I don't get it. I don't get it. And then followed by number 3 on the job added to list was healthcare. Healthcare came in with about 40,000 new jobs in September. And I get that. You know, we got 68 million baby boomers, right? 68 million, I believe, between 68 and 70 million baby boomers. Guys, we only have 350 million people in this country, including kids, right? And young folks under the baby boom age. But when you got 68, 70 million baby boomers, that's a big part of your population, guys, a huge part. And those people are aging, they're getting older. So healthcare, I can understand adding jobs, right? Because you gotta prepare for this 68, 70 million people who are between, I believe it's between 58 and 77 years old. That's your baby boomers. And we got like I said, we got almost 70 million of those people. So I get why healthcare added jobs, but what I can't understand is why the government added 73,000 jobs, and I can't understand why leisure and hospitality added 90,000. They led the pack. Remember, guys, since January, leisure and hospitality, from a job creation standpoint, had been slowing down, which is what the Fed wants it to do, because leisure and hospitality is not a need in our life, guys. That's not a need, right? We don't need to be taking trips on vacation. We don't need to be going out to restaurants. We don't need to be doing all of this stuff associated with leisure and hospitality. We don't need to be doing it because why? Inflation is still too high, right? Now, what's the Fed's option? Again, number one option is to increase interest rates to continue to inflict more financial pain on the American people and our economy. Just continue to raise interest rates. At some point, guess what? Something in our economy is going to break. Something's got to break if they keep raising rates. That's one option. I'm not saying they'll do that option, but that's one option. The next option is we're already at 5.5% Fed funds rate. And what they can do is keep those interest rates high at the 5.5 for longer, right? Just don't reduce them. Just do not reduce them, just leave them there. Maybe do a quarter bump in November, get us up to 5.75 Fed funds rate, and then leave it there. Just leave it there and just see what breaks. Because at some point, with them rates as high as they are, and if they leave them higher for longer, something in our economy is going to break. Something is. So that's the second option. Third option is ignore it. Ignore the jobs report. Just say, well, we're not going to pay any attention to the jobs report. We know that the economy is still growing. We know that the economy is still adding jobs. And the reason we know it's growing because they're adding jobs. People don't listen, man. You don't add jobs to the economy unless you feel like there's a bright outlook. There's a reason to employ people. Companies just don't hire people to hire them for no reason. They're hiring them because they think it's something to prepare for, right? So the Fed could just say, number three thing they could do is just ignore it. We added 336,000 new jobs. No big deal. We're going to ignore it. We're not going to raise interest rates, and we're going to start reducing rates next year in June. That's their three choices, in my opinion, right? Raise interest rates and keep raising them until the American people get it, until they feel some more financial pain, until American companies feel more financial pain. That's one choice. Second choice is they can say, you know something? We're just going to pause. We're just going to leave rates at 5.75 the way they are for a period of time. Just leave them there and see if something breaks, right? Because you got to understand interest rates are still incredibly high, which do affect the housing market, which we'll talk about in a second. It also affects the stock market, whether you believe it or not. Interest rates being high affects the stock market. The reason we'll talk about that. We'll talk about that in a second. In the next piece of this live stream, we're going to talk about why the stock market is still falling. And then the third choice the Fed has is, like I said, just ignore it and start reducing short-term interest rates next year and hope for the best. Those are the three options. Curious to know what you guys think. What do you think the Fed should do, given the fact that we still have a pretty resilient jobs market, given the fact that we need the jobs market to slow down in order to get inflation down? I don't know. If our economy continues to grow with inflation at 4%, there's a chance inflation could go back up. And guys, we do not want that. So it's critical that the Fed study this, look at this data, and make the right decision. It's also critical that the American people make the right decision. Leisure and hospitality, man, that is crazy to me that it's added 90,000 new jobs, given the fact we're still in high inflationary times. Very interesting. Love to hear your feedback on that. Now let's move into the second part, which is the stock market falling again. Jobs report came out on Friday, like I said, October 6th. Stock market reacted kind of lukewarm, right? It wasn't a major sell-off, but all three major indexes on Friday closed in the red. It was like lukewarm. And here's what I think though. Investors, when they're looking at the stock market, they're saying to themselves, okay, inflation is still high, 4.3%. We need it at 2%. Fed has already came out and said last month they're going to keep rates higher for longer. That means they're going to keep the Fed funds rate at 5.5 or higher for longer, right? That's going to happen. So what does that mean? The Fed is not 100% optimistic that the Fed funds rate is going to, the Fed is not 100% optimistic that inflation will come down under 2%. So they're going to leave rates higher for longer. Stock market don't like that, right? Investors don't like that. So what do investors do? They say, well, you know something? I can go out and get a 2-year U.S. Treasury, right? Let's say I can get it at 4%, 5%. I can do that. I can move monies into that investment. It's protected. It's guaranteed. Or I can continue to play in the market while it's volatile, not really knowing how long the Fed is going to keep interest rates higher for longer. Because see, the way the stock market works is the lower interest rates are, the better the stock market does. Why? Because the stock market is made up of companies. And then when companies can borrow money cheaply, right? Let's say a company can borrow money at 2%, and then they can take that cheap money and then they can put that money into growing their company. Let's say they can grow their company at 8%, but they borrowed money to grow it at the 8% for, let's say, 2 or 3%. It makes sense at that point for companies to borrow money when it's that cheap, because they can turn around and multiply that money through growth. But when companies cannot borrow money cheap, and they can only borrow money at the Fed funds rate or higher, let's say they can borrow them, let's say Fed funds rate is 5.5 and they can borrow the money at 5.5 plus 3 or 5.5 plus 2, then at that point it's not attractive anymore, because most companies aren't going to get double-digit growth, right? They may get single-digit growth, but they're not going to get double-digit growth. So borrowing money when interest rates are high don't make sense for companies. So what do companies do? They typically will slow down and batten down the hatches and not grow, not expand. And the stock market is made up of companies. So if companies are not growing and expanding and being profitable, then the stock market can't grow and expand and be profitable. That's what's happening right now with interest rates. That's why it's critical when investors hear the Federal Reserve Chairman Jerome Powell last month say, we're going to keep short-term interest rates higher for longer. It threw them into a panic. They started selling off. When you see a jobs report that comes out last Friday, October 6th, and you've added 336,000 new jobs when the experts thought the economy would only add 170, that threw investors into a panic. Why? Because the investors are thinking the Fed is not going to like this. The Fed is not going to like that the economy added 336,000 new jobs, especially when they are trying to get inflation down. So what does that mean? Backs up what the Chairman Jerome Powell said. They're going to keep rates higher for longer. So guess what? Investors sell off. They move some of their money to other investments. And one of the most popular ones right now is U.S. Treasuries. Why? Because U.S. Treasuries are paying a higher yield. And it's guaranteed by the full faith and backing of the United States government. That's why U.S. Treasuries are such an attractive proposition right now for investors, because it's guaranteed money, right? Why would I fool around in the stock market where it's so volatile? And I'm not saying all investors are doing that, but they're moving in and out of the stock market. And when they're not in the market full force, they got part of their money in treasuries or other short-term investments until the market is back to a point where they can predict what's going to happen. See, investors like certainty. And right now, there is no certainty in the stock market. Now, that doesn't mean for investors like you and I, retail investors, it doesn't mean it's not a good opportunity for us, though, to build wealth, because it is. Because, see, what we're trying to find is very good companies, very good ETFs that are trading at a discount that we can buy today, and then hold those investments until they trade at a premium again. So for retail investors trying to build wealth, I think it's the perfect time to be investing in the stock market. That's my opinion. I'm not your financial advisor. I'm not a financial advisor. I'm just a guy on YouTube, but I've been investing in the stock market for over 25 years on my own, right? Not being the expert, but just going and picking investments that have a historical track record of success. So for retail investors trying to build wealth, this is a great opportunity to start buying your favorite companies and your favorite ETFs while they are on sale, while they are trading in the red, right? But for your billionaire hedge funds, for your institutional investors, their job is not to just think long-term. Their job is to think, how can I get the highest and best return for my clients today? Because a lot of their clients are using this money to live. They're using the passive income from these investments to live their lifestyle. So your institutional investors and your hedge funds and all these investment companies that are moving around billions and billions and billions of dollars every single day, they're doing that so that they can find the best investment now that yields the highest return so they can pass on that passive income to their clients. You and I are not in the enjoyment stage of wealth. Well, I am, but a lot of you guys are not in the enjoyment stage of wealth. You're still in the building stage of wealth. So in the building stage of wealth, what the market is doing right now should be, it's like a lottery ticket. That's what it's like. It's like a lottery ticket for people who are in the building stage of wealth, because isn't it nice to be able to buy your favorite companies, your favorite ETFs at a discount, and then hold them 3, 5, 7, 10 years, and boom, you've increased your net worth 1 time or 2 times or 3 times over that period of time. So that's why it's a great opportunity for people who are building wealth. People who already have wealth and they need that wealth to generate income, this is not good, because they got to start moving their money around so that they can get the best return they can get. They don't have the they don't want to trade at a discount right now. Not if they're trying to get income off of it. So a lot of these people will move their money to US Treasuries in order to avoid a catastrophe in the stock market, right? And US Treasuries go up in value when interest rates go up, at least brand new US Treasuries. Now, the secondary market where existing US Treasuries are being traded, they don't like when interest rates go up because they trade less. So if I already got US Treasuries and I bought them 2 years ago and interest rates go up today, I'm at a disadvantage, because now if I want to get rid of my US Treasury that's 2 years old in the secondary market, it's harder for me to get rid of it at face value, because why would I pay you face value for a 2-year-old US Treasury at a lower interest rate when I can just go buy a brand new one with a higher interest rate? So in the secondary market, US Treasuries are hurt when interest rates go up. In the brand new issue US Treasury market, it's a good thing. But investors tend to, flee to safety to US Treasuries when the market is so volatile. So that's why the stock market is falling, just because investors, guys, and when I say investors, I'm talking about hedge funds, institutional investors, billionaire investors who trade short term. These people, and you got to understand, guys, 75% of the stock market is made up of these big, gigantic investors. Only 25% are made up of little individuals like you and I. 75% of the trading that's done in our stock market is done by billion and billion dollar hedge funds and institutional investors. So when those folks or their companies move money around, it affects the stock market because they control 75% of the dollars that go into the stock market. We control about 25%, right? So when those folks are moving their money around trying to avoid losing money for their clients in the short term, it's a great opportunity for us long-term folks, us 25% folks, to get in there and buy up those assets at a discount, because we know we're gonna have to hold them for 3, 5, 10 years before we're ready to use them, right? But that's where we get our net worth from. So that's the reason why the stock market is falling, because big institutional investors, hedge fund investors are not happy with the direction that the interest rates are going as it relates to the Federal Reserve. They know the Federal Reserve is going to hold those interest rates higher for longer, and it's going to hurt the stock market. So they're starting to position some of their assets out of the stock market, predominantly going into US Treasuries. And then the last piece of this puzzle we want to talk about is the housing market in trouble. I've been telling you guys for the last, 3 months or so, that the housing market is in a tight situation. And the reason they're in a tight situation is because of interest rates. Interest rates just recently for your 30-year fixed rate mortgage rates went past 8%. Interest rates haven't been past 8% since, like the early 2000s, late 1990s was the last time interest rates on 30-year fixed rate mortgages went as high as 8%. Right now, that's where they're at. They're at 8%, guys. And that's hurting the housing market. It's going to continue to hurt the housing market. And you can tell it's hurting the housing market because if you look at sales transactions of residential homes, year over year, they're down by 15%. So you can tell what's happening. Transactions are not as good as they were a year ago, right? Also, what's hurting the housing market is affordability, right? And I'm not talking about affordability of how much the house costs. I'm talking about the monthly payment. When you got interest rates at 8% or higher, that's not good for your average middle income, slightly upper middle income earner. They can't afford the monthly payment. Let's take a $500,000 house. Let's say you found your dream home. You love it. It's $500,000, right? You got to go get a loan for $500,000. Now, 2 years ago or a year and a half ago or, roughly 20 months ago, you could have went and got a loan for $500,000, good credit, verifiable income. You could have got a loan for $500,000 at 3%. That payment would have roughly been $2,100 per month. That would have been your mortgage payment, principal and interest, on a $500,000 loan at 3%. Now you're talking about less than 2 years ago, guys. Fast forward to today. Same $500,000 loan at 8%. Guess how much that payment is going to cost you per month? $3,700. You're talking about a $1,600 a month difference in monthly mortgage payment on the same $500,000 loan. That's why we're in trouble in the housing market. Affordability, man. People can't afford that. Come on. Can't afford it. Who can afford to pay an additional $1,600 a month for principal and interest? That ain't even counting your taxes escrow, your insurance escrow. Forget about it if you got HOA fees on top of that or condo fees. Come on, man. You're probably $5,000 a month on a $500,000 loan when you add in interest, all that stuff. The concern is, how long does the housing market last with this type of affordability problem? Now, some people say, well, hey, we're doing okay. Prices are holding steady. Yeah, prices are holding steady because we got very low inventory. But the problem you run into with low inventory and when you have affordability issues is people can't buy homes. I'm not talking about millionaires and billionaires and all these 1%ers. They're going to buy whenever they want to buy because they got the money to do it. I'm talking about the 99%ers. See, the 99%ers, they can't buy. So what do they have to do? They got to rent. How does rent play into what's happening with inflation? Because if you know anything about inflation and what makes up inflation, shelter cost makes up a third of our inflation, guys, in this country. Shelter costs. Guess what goes into shelter costs? Rent. So if I can't buy a home because I can't afford the monthly payment, what's my next option? I got to rent. Guess who knows that? Landlords, right? Why do you think apartment buildings, at least down here where I live at in Southwest Florida, we got brand new apartment complexes. I'm talking about 400-500 unit apartment complexes going up everywhere. Why? Why are they going up? And other places around the country. Why? Because developers know people got no other option. They can't buy a home and finance it because the rates are too high. Like I told you, I gave you that illustration on the $500,000 loan. 3% interest rate versus an 8% interest rate. $1,600 a month difference in monthly payment. That's crazy. So developers, right, of multifamily housing, they know this. Guess who else knows it? Remember we talked about those big old gigantic institutional investors? Those big old gigantic hedge fund investors? Ever heard of a company called BlackRock? Yeah, they're a big behemoth, right, in the investment world. Guess what BlackRock started doing? They started buying up single-family residential homes. Just buying them up. And guess what they're doing? They're renting them out to people. Yeah, that's part of their portfolio now. They have a real estate portfolio now consisting of residential homes. And the reason they're doing that is because it's profitable. Because they know, research tells them, your average American is not going to be able to afford to buy a new home. Not with interest rates at 8%. So guess what we got to do is just go out, spend all these gazillions of dollars that we have, buy up great real estate in good little neighborhoods, and just sit on the property. And here's the deal. While we sit on the property, we're going to charge market rent. Whatever the market says we could charge, we're going to charge it. And guess what? It's still going to be more affordable than them going out trying to get an 8% mortgage. It's still going to be more affordable than that. So while we hold these properties as a short-term investment, we're going to go ahead and collect this rental income and just take the cash flow. Then what we're going to do is, once rates start coming down, which they will at some point in the future, when rates start coming down, all those folks who could not buy 2 years ago because interest rates were 8%, now interest rates are back down to 4%, maybe even 5%. And people are saying, whoa, I can stretch this. I can make that fit my budget. Let's get out and go buy us a house. Then guess what BlackRock is going to do? Turn around and put all that rental portfolio on the market and sell it at market rate and make a killing from appreciation as well. That's my opinion. I don't know that for a fact, but I'm telling you, I've been in the real estate business for a long time, and this is how people make money in real estate, right? They find the need, guys, and right now the need is rental properties in good neighborhoods with good schools where people can feel safe. I can't buy right now because I just can't afford it. But guess what? That doesn't mean I don't want my family in a safe community. That doesn't mean I don't want my child to go to the best school possible. And guess what? People who understand that, companies like BlackRock, companies, other retail investors that buy real estate for income, that they understand that, that's what they're doing. Because the people can't afford to buy a new home anymore, not at 8% interest rates. See, that's why I keep telling you guys, when you understand what's going on in this financial system, you can put yourself in a position to be able to do what? Participate and capitalize. See, a lot of people running around, whoa, how can you buy real estate if rates are 8%? How could you even buy rental properties? Well, here's the deal, guys. Everybody who buy real estate for income don't need to go get no loan. They don't. BlackRock don't need to go get no loan. They got cash. They got investors' money. They don't need to go get a loan. Foreign investors who are coming over here, buying up all the great real estate, they don't need no loan. These people got cash. Baby boomers. They don't need no loan in most cases. These people are coming from the Northeast, the Northwest, the Midwest, and they're flocking down to Florida, Arizona, places like that, Texas, and buying properties for cash because they've sold their other home up north somewhere and made $1 gazillion. And they're just taking the money and paying cash. Everybody don't need a loan. But for the majority of people that do need a loan, right now they can't get one cheap enough to make the numbers work. So yeah, the housing market from that standpoint is in trouble for middle class Americans. Upper middle class Americans, they're in trouble. They can't buy a home. And guess what, guys? Whether you like it or not, your home is your biggest asset most of us will buy, is our home. That's where the majority of Americans build their wealth, is in their home. So if there is no home ownership, guess what? There is no amount of building wealth. If I don't own my own home and I got no equity in it, typically that's where most people's net worth is in their home, right? I buy a home for $250. I stay in it for 15 years. It's now worth $450. That's where my net worth is in that home. But if I can't own a home to build any equity, a lot of people are going to be stuck when it comes to net worth because they're not going to have any. Right? That's a problem. Guys, if you're coming in the chat, hit that like button for me. Just go ahead and tap the like button. We got a lot of people in the live. Please hit that like button. About half of you hit the like button. Would love the other half of you to start hitting that like button for me. If you enjoy the content, whether you agree with everything I say or not, if you're stopping by the live, you're enjoying the content, hit the like button for me. It's important that we hit that like button so that we can get YouTube to pick up this content and share it with more people. The whole idea behind me doing these videos is not to entertain folks. The whole idea is to give you tips and nuggets from my experience, give you my perspective on what's going on currently in our financial market. You can take what you need to take or take none of it. But the key though is get it out to more people so other people can see it, whether they agree with it or not. Maybe they take a nugget or two, but maybe it changed something in their financial life and can help to get them to freedom. So the whole point here is to do these lives, to do these videos so that we can spread financial information that people can at least get them to thinking. My thing is all of this stuff that I've covered, if you guys are not paying attention to any of it, what good is it? I tell you, like we talked about the jobs report. You guys should be paying attention when these jobs reports come out. It's going to tell you what's going to be happening. Pay attention to these jobs reports. You should be paying attention to these CPI inflation reports that come out every month. Right? You should be paying attention to what the Federal Reserve chairman is saying, what the Federal Reserve governors are saying, what the Federal Reserve banks are saying. I did a video a couple days ago talking about the Federal Reserve Bank of San Francisco. And they did a study. A couple of their economists did a study about the American people and their personal savings. How the American people over the last 2 years have spent pretty much all of their personal savings. Went from $2.1 trillion in personal savings all the way down to less than 200 billion. Less than 2 years. That's a problem in this country. That is a problem. Also talks about how credit card debt in the United States has surpassed $1.2 trillion. The highest it's ever been, guys. That's a problem. But if we're not paying attention to these types of things and understanding what's going on, I feel sad for you because you're going to be in a world that things are moving financially and you have no idea what's going on. Only way you have any idea what's going on is you're going to have to plug in to a source. My channel is one of those sources. It's not the only source, but it's one of the sources. I'm no expert. I'm just a guy that pays attention financially. That's the reason I built my wealth and I'm able to live the lifestyle that I live right now because I pay attention. I don't have to be no expert. I've never tried to be an expert, but I do pay attention. I do try to understand what's going on in this financial world that I live in if I expect to build wealth. Now, if you want to be broke and poor for the rest of your life, then don't pay attention. Just go on to Instagram and look at skits all day. Look at comedy all day. Look at people acting the fool all day. If that's what you want to do, if you want to stay broke and poor, do that. But if you want to build wealth and get yourself in a position where you can control 100% of your time, 100% of your financial destiny, you better start paying attention. And like I said, my channel is one of those outlets. And all I do here is tell you my perspective, give you my opinion. Whether you agree with it or not, that's on you. But at least you get an opinion. At least it gets you to thinking. At least it gets you to a point where you say, I wonder what that guy said. Maybe I should go do a little research on that and check that out for myself. I don't know. He's saying the stock market is this. He said, because I get, you said the stock market is a great place to put money, but now you say the stock market is down. You don't pay attention. You don't pay attention. You don't pay attention. You read titles to videos, and that's all you do. And you don't pay attention, and you don't get into the full video to understand exactly what my perspective is. Stop surfing titles on YouTube and actually dive into the content and pay attention. See, one thing, we got attention span of a damn gnat. We got an attention span of a gnat. Boom. I've been here 5 seconds. Oh, golly. He's boom, gone. I'm gone again. We got the attention span of a gnat. Stop. Pay attention. Listen. Right? I'm not saying take everything I say and think of it as the Holy Bible, but at least take the information, go out and do your own fact finding, do your own homework. Right? At least get you to thinking. Guys, let's get them thumbs up. Let's hit that like button for me if you don't mind. I know a lot of you have. I'm going to continue to ask you to do that because it's extremely important. My goal is to get this content out to more people. And the only way I get to do that, guys, is I got to get you to hit the like button for me so we can get more engagement, all right? I know a lot of y'all are in here, and I appreciate it. And I'm gonna get you out of here in a minute. I got a couple more things I want to cover, and then we're going to button it up. But please, guys, start paying attention. Stop living your life paying attention to stuff you shouldn't be paying attention to. I understand we all want entertainment. We all want something to escape and forget our problems. Guess what? They coming back. Unless you handle your problems head on and resolve them, they ain't going nowhere. You might take an hour off from them while you watch somebody else's problems, but your problem's still there. You gotta tackle your problems head on. And I'm talking about your financial problems. Your financial problems are not just gonna disappear. They're gonna get worse. I'm telling you what's happening to our economy. I'm telling you what's happening in our stock market. I'm telling you what's happening in the real estate market. For you, if you don't pay attention and figure out a strategy to navigate all of that and still build wealth, that's on you. You got to pay attention, though. You can't just live your whole life want to be entertained. Somebody make me laugh. Who cares about all of that? I don't care about any of these celebrities. I don't care about any of these athletes. These people rich. These people are wealthy. You broke. Get yourself wealthy. So let's make sure we're starting to pay attention. Right? We need to be paying attention to what the Fed is doing. And that's just the government. It's Bidenomics. Let's blame Biden. Let's blame Trump. Let's blame whoever. We always looking for somebody to blame. It's one thing about us, man. We always looking for somebody to blame, boy. We ain't gonna take no ownership of nothing. Nothing. You are a collection of the choices you've made in your life. Right now, today, you are the collection of all of those choices you made up until now. That's what brought you here, your choices. It wasn't Biden. It wasn't Trump. No, it wasn't. It was you. And until you face up to that and look in the mirror and say, I'm going to correct this stuff, it's going to keep happening to you. I keep telling y'all, I don't care who's in the White House. Ain't nobody from the White House coming to my house and ask me anything about what I need. Nobody. No politician, as a matter of fact. None of them are coming to me and ask me anything about what I need. So why do I care? I don't. What I care about is what directly affects me, which is what? My ability to build wealth and get to freedom. That's the only thing saves me. Ain't no politician gonna save me. Ain't no law they create gonna save me. What saves me is building wealth, buying assets that produce passive income, and I can take care of myself. That's what saves me. Freedom saves me, nothing else. So all this time we spending on all these other things that have nothing to do with getting us to freedom, you're missing the boat. You're missing the boat. You're missing the boat. What a perfect day to start not missing the boat. What a perfect day to get on the boat, right? It's a perfect day to do that today, but you got to pay attention. You got to know what's going on in this financial world, right? I just gave you a quick little snippet of what I believe is happening. Whether you agree with it or not is irrelevant. What's relevant is what you believe. It's irrelevant if you believe what I believe. What's relevant is what you believe, right? You need to get out there and figure out what is happening and how do I navigate this financial system to build wealth and get to freedom. Last thing I'm going to cover, guys, and then I'm going to get y'all out of here. Y'all know I'm starting a real estate fund. And this real estate fund is something that I've been wanting to do. And I've been talking about this quite a bit on my social media platforms. I've done a couple of live streams about it. I've done some stuff on the Instagram channel, at the Instagram page as well. And what I'm going to be doing is starting a real estate fund where other like-minded investors can partner with me and we can invest in a fund that's going to go out and buy real estate for income, to make money, right? We're going to have cash flow, and then we're going to have capital appreciation once we sell the property down the road. It is an investment commitment of 5 years, 3 to 5 years. So if you don't have money to tie up for 3 to 5 years, then it's not the right investment for you. But what we're going to be raising is at minimum 20 million bucks. And then we're going to take that money and we're going to go to places that we believe have the best opportunity to give us instant cash flow and the best possible appreciation we can get on that portfolio. The whole goal here is to make money, right? It ain't just to say, oh, I own real estate. No, it's to make money. And the first place we're going to go deploy money is going to be in Boulder, Colorado. I spent some time in Boulder. I like Boulder. It's a great place to invest in income producing real estate. Got a lot of things going on there, and that's going to be our first place. We're going to deploy money to buy assets, real estate assets for income. If you're interested in that type of concept, then there's an email address in the description box of this video. Down in the description box, there's an email address for my company, RF Financial Consulting. Get that email address, email me and say, hey, Richard, saw the video where you're going to be opening this real estate fund, and I'd love to get more information on it. Right now, I'm just going to respond to you with an email. I don't have the fund formalized yet, so I won't be able to send you any of that stuff. I haven't picked out any properties yet because I ain't got no money yet. I don't have a formed real estate fund yet. That has to come first. Then we'll collect money, and then we will start buying assets. But I can respond to you with an email and give you some estimates of what we're looking to do and what type of returns we can expect. Again, it's a 3 to 5 year commitment. So make sure your long-term thinking is in those years, because that's how long the money will be tied up. Again, that email address is down in the description box under RF Financial Consulting, or you can simply DM me on Instagram at RichardFain28 as well, if you want to do that, if it makes it easier for you. But we are going to be having this real estate fund. It's going to be wonderful. It's going to give small investors like you and I the ability to be able to move in the real estate arena, buying big properties or a collection of properties, and then generating some serious cash flow and potentially some serious capital appreciation. And what we want to do is start it off, like I said, a minimum of 20 million, but man, that thing can go up to 100 million if that's what we want to do. And I'm specifically looking for people who are like-minded like me and want to build wealth and want to use real estate to do it, but they don't necessarily want to have the day-to-day management of tenants and toilets. You know, they want the idea of having part of their portfolio dedicated to real estate for income, but they don't necessarily want to handle the day-to-day. That's where I come in, and my team will come in. We will actually manage and do all of that stuff. I won't manage it, but we'll have a third-party company that manages the properties, manages the portfolio. So therefore, you guys, all you got to do is kind of sit back, and if the properties are successful, that means you make money. That means I make money. And the goal here for me is to just do it with a bunch of folks that that I want to do it with. And my YouTube audience and my Instagram audience are those people. I could go out and go to the private sector and, get a bunch of rich folks who I don't really know or don't really have a connection with. I could do that, but that's not what I want to do. I want to do it with people I got a connection with. And I got a connection with you guys through this YouTube channel. You're like family to me, right? So I'd rather do it with family, right? So send me that email if that's something that you're interested in, and I will drop you just an email back saying, hey, here's some general outline of what's going to be happening. If you have interest, what type of interest level are you really willing to commit to it? And then when it's time, you'll be being followed up with more hard documentation as we formalize the real estate fund. I got to go out and get a real estate syndication attorney. Because that's what you need, one of those folks to help you really formalize this thing the proper way. So I got some stuff I got to do, and I'm not asking anybody to send me a dime to do any of that stuff. All that stuff I'm going to pay for. I don't want a dime from anybody until I'm formalized and I'm ready to take on investment, and then we're ready to buy properties. I don't need people sending me money to help me do anything with that. I just need you to see if it may be potentially a right fit for you. And if it is, send me the email. Again, I'm doing this because I want to get back into real estate, but I don't want to do it by myself. I don't want to just be out here by myself doing this. I want to take some people with me. I want to be able to do trips with investors. Everybody that wants to come, y'all meet me here. Let's look at our property. Let's walk through this property. That's the kind of stuff I want to do, and I wanted to do it with people who I believe need that impact, that financial impact in their life, right? Not some 1%er who already rich. Them guys are good and them gals are good. I'm trying to get this 99% of us who may not have, who may be a little bit afraid and say, I just don't want to do this real estate thing on my own. It's too much, but I'd love to help or be a part. Right? I would love to be a part of a fund that does this. So that's who I'm looking for, right? So drop me that email. Also, I'm looking to open some businesses. Now, well, I'm not going to open the business, but I'm looking for operators who have health conscious type businesses that would open up a business or the basis of their business would be in Boulder, Colorado. I would be the investor. So I'm not going to be the one running the operations. You're going to run the operations. You're going to come up with the game plan. And then you take that game plan, sell it to me. If I like the game plan, then I invest in your business, but it will be based in Boulder, Colorado, whether it be physical brick and mortar or whether it be e-commerce. I'm just the investors. You are the operator and the business owner. So don't come to me for, how do I open this up? Then I'm not the right investor. I need people that already know what they got going, they have a proven track record, and they want to duplicate whatever they're doing wherever they live now. They want to duplicate it in Boulder, Colorado. That's what I'm kind of looking for. If you're that type of business owner, email me. I'm going to invest, and I got other folks willing to invest in businesses like that, all based around the Boulder, Colorado area. And if you guys want to know why, just go tap into a couple of my videos that I've done that I've talked about this over the last few days, and it'll give you more detail. Or just send me an email. So those are the two things that I'm doing for 2024, real estate fund, and I'm going to be investing as a strictly investor in businesses, proven concepts, already got money, already got cash flow, but just want to duplicate what they're doing wherever they're at in Boulder, Colorado. Got to be health conscious. Got to be outdoors. The business doesn't have to be outdoorsy, but it does have to be something that fits well in the Boulder, Colorado community. For those of you who don't understand what that lifestyle is, go out online and research Boulder, Colorado before you email me. I'm not going to do the research for you. You go research Boulder, Colorado, figure out what works in Boulder, Colorado, what the lifestyle is like, and then take that information and see if what you're doing now is duplicatable there. If it is, then you got a guy like me who's willing to invest money to duplicate it. And I have other investors that are willing to invest money to duplicate it. All right? So those are my two things I'm asking you to do. Hit me in the DMs on Instagram at RichardFain28 or email me. Email address in the description box of this video. One more time, guys, for the like button. I see people starting to tap out. Hit that like button for me. Extremely important that you guys hit that like button as you tap out. Please hit that like button. We can get this content spread out to more people. I really greatly would appreciate it. Thank you so much for hitting the like button. Continued support of me and this channel, getting this financial message out, this financial gospel out. We're going to keep doing it because that's what I'm put here to do. But I need your help in order to do that. I need your help. Your help comes in the form of hitting that like button. So please hit the like button. That's how you help me get this word out to more people. And I know 99% of you guys want that to happen. So please understand that's not something that I don't understand. I understand a lot of you guys on here support me and I appreciate it. That's the reason I get out here every day and I make content because of you guys. Last plug on Weebull. Weebull offer down in the description box. Weebull's going to give you up to 12 free stocks when you open a Weebull brokerage account, a new Weebull brokerage account. They're going to give you up to 12 free stocks for just trying out the app. Link down in the description box. Go open that Weebull account, guys. Go put you some money in that Weebull account. If you want to buy paper assets and build wealth, that's a way you can do it. I use Weebull every day, every single day to transact business. I wouldn't ask you to do something that I wasn't doing and using. Please understand that. Give it a shot though, right? Give it a shot. I don't care if you got another brokerage account. Doesn't matter. Give it a shot, right? Give it a shot. Link down in the description box. Plus, I'm going to send you that tutorial video. If you DM me on Instagram and tell me you opened the account and you funded it, I'm going to send you a tutorial video to show you how to use the Weebull app to make your first trade. Once you make that first trade, you're a pro, right? You're well, not a real pro, but you know what I mean. You know how to do it because I'm not a pro. But hey, I know how to at least navigate through there and make my trades, right? So I'm good to go. Yeah, so that's about it, man. I'm getting ready to sign on out of this thing, finish up my Monday. I got a 3 o'clock one-on-one call. Oh yeah. Before I get out of here, I do need to let you guys know I do 1 hour financial mentoring and coaching sessions. I call them financial sessions, right? I do these 1 hour financial sessions with folks. Same email address in my description box. You can email me and let me know you're interested in a one-on-one financial session. Now, what do we do in that financial session? Well, we talk about your specific financial situation, right? So you got all these financial puzzle pieces, right? All around. You know, you might got a checking account. You might got a savings account. You may got a 401k. You may not have a 401k. You may have a job. You may not have a job. Whatever your financial puzzle pieces are, we talk about a way to put those financial puzzle pieces into a cohesive, complete financial puzzle where it's complete roadmap. And then in that hour, we put that together. Now, here's the hard part, though. After we put it together, you got to execute it. I don't execute it for you. I don't do no follow-ups. Nope. Your financial freedom is your thing. My financial freedom is my thing. So if someone gives me information, it's my responsibility to take that information and do something with it. That's what I do in these one-on-one sessions. So if you're interested in that, send me an email. I'll tell you exactly what it costs because it is an investment in you, not in me. It's not free. I do charge for that 1 hour session. The question is, if you believe you want to make an investment in yourself that can collapse time frames and get you to your freedom faster, then it's worth it. If you don't think it's worth it, then don't do it. Keep watching the content. Keep watching the content. Keep watching the content. All right? And you'll make it happen that way. But for those that say, you know something, I need to collapse time frames. I ain't got another year to learn. I need to get it done, get a plan, and start executing that plan. Collapse time frames. That's what that 1 hour session will do for you. It will collapse time frames. Now, you got to come into that one-on-one session, though, ready. You got to know what you want to accomplish with your financial life. And then I help you put a plan together to accomplish that. I can't figure out in that 1 hour what you want to accomplish if you don't know what you want to accomplish. It's not my job to figure out what's right for you. That's your job. My job is to assist you with a plan that can get you to where you want to go. So you need to have some idea where you want to go, right? You need to have some idea where you want to go. Again, this is not about me telling you to send me money or invest something for you. I don't invest money for people, right? I'm a financial consultant. I'm not some guy or gal who takes money from you to invest it for you, called a financial advisor, and then they take a fee to do that. No, that's not what I am. One thing you better understand, when people work on commission, they eat what they kill. I'm not knocking financial advisors. I think if you get the right one, it's great asset to your financial team. But you better be careful which one you get because they eat what they kill. All that means is they make no money unless they do transactions for you. And they got to do a lot of them. So you walking in there with your little $5,000 that you want to invest, ain't no financial advisor won't want to see you, man. Why? Because they can't make no money. Why would I spend an hour with somebody who got $5,000 to invest and I do one transaction, I make $50? That's not what these guys work on larger dollar amounts. Now, collectively, if someone's managing a $5 million portfolio and they're getting a 1% a fee for that, managing that portfolio, that could be a $50,000, that's a $50,000 portfolio. But that's on $5 million at a 1% fee. So all I'm telling you is if you're someone who doesn't mind investing on their own in certain products, certain investments on your own, like I did for 25 years, you don't have to worry about that. But if you do want to go get a financial advisor because they got all the letters behind their names and you feel more comfortable, then do that. That ain't got nothing to do with my financial session, though. My financial session is not about taking money from you and investing money for you or telling you exactly what you got to do with your money. That's not what it's about. My financial 1 hour session is about empowering you to be able to go out and make your own decisions about your financial future. That's what my financial session. It's not about taking money from you and trying to advise you on what stock to buy. Oh, go buy this stock over here. It's a winner. That's not what it's about, guys. It's not about that. See, your financial picture is much bigger than that. You guys pigeonhole yourself into these little, no, your financial situation is much bigger than that. Building wealth is much more about a cohesive plan than it is just about one little individual thing you invest in. It's about more than that. So my financial session is what brings all of that together. Doesn't mean you can't still then go out and get you a financial advisor if that's what you want to do. Go get him. Doesn't bother me. It doesn't bother me at all. I recommend that for people who don't want to do it on their own. Go get you a financial advisor. But do know when you go get that financial advisor exactly what they do for you and exactly what they charge. Right? You're going to sign this little piece of paper when you go to one of them. They go electronically or in person. You may lose money. You may gain money. You may lose money. All that's telling you is if they take your money and invest it in something and they lose money, that's on you, because you signed a little piece of paper telling them they can invest it. So you better know who is investing your money. You better know what their track record is. You better know how they get compensated. Because what you don't want to do is someone's getting compensated on transactions and they're moving your money in and out of stuff, right? And they moving your money in and out of stuff just to generate transactions so they can get paid more. That's not a good thing. So know this when you go out and you hire yourself a financial advisor. They're a great addition to your financial team if you get the right one, right? But you better know that, but like I said, you don't go in there blind though. You better know something about what you're trying to get accomplished. I'm just telling you, just like anything in life, you got good and you got bad. I don't care what profession, what walk of life. You got good people, you got bad people. That's in the financial world too. You got good YouTubers who have the best heart for you, and you got bad YouTubers. You got good Instagrammers, bad Instagrammers. You got good financial advisors, bad financial advisors. Your goal is to find the good. Your goal is to find the good, right? That should be your goal. Find the good. All right, guys, I'm going to get on out of here. I appreciate you. I appreciate your loyalty. I appreciate you stopping in, tapping in, listening to me. Hopefully you got some good financial food today that you can now take and feed your filter system, your brain. Good financial food that you can feed your filter system. I hope you got that today. If you did, hit that thumbs up for me as you tap out. I really would appreciate it. Also, share this content with someone that you know or you don't know. You know, pop open your email Rolodex and just blast it out to everybody, right? Who knows who may need a financial leg up today? We don't know that. We don't know what goes on behind people's closed financial doors. They may not share that with us. Oh, that's my best friend. Well, they ain't gonna share everything with you. I can promise you that. Your best friend ain't gonna share everything with you, right? So spread the word. That would be gratefully appreciated as well. Spread the word through sharing the video. Please share the video. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never, never stop believing in yourself. And I'm going to catch you on the next live or on the next video. Peace.